have to make smart choices when it comes to investments, especially for the financial future of your kids. Bajaj Allianz Life has a unit linked endowment plan called Bajaj Allianz Life Smart Wealth Goal. It has three variants, namely Wealth Variant, Child Wealth Variant, and Joint Life Wealth Variant. This video focuses only on Child Wealth Variant. In this video, let us analyze this policy in depth to decide whether you should opt for this plan or not. Welcome to holisticinvestment.in. Bajaj Allianz Life Smart Wealth Goal is a non-participating individual life regular premium, limited premium and single premium unit linked endowment plan. Let us look at the feature, investment strategies, advantages and disadvantages, and finally let us find out what would be the potential return from this policy. First, features of Bajaj Allianz Life Smart Wealth Goal. You have the choice of 5 investment portfolio strategies and 10 funds to choose from. Systematic partial withdrawals are allowed to meet your child's key milestones. And there are some return of charges, return of premium allocation charge, return of mortality charge, return of income benefit charge, return of morbidity charge, and return of waiver of premium charge. Life covers payable in case of earlier occurrence of death or accidental total permanent disability. In case of earlier occurrence of death or accidental total permanent disability, all future prevailing premiums will be waived and income benefit paid each year till the end of the policy term. Now let us focus on investment strategies of Bajaj Allianz Life Smart Wealth Goal Child Wealth Variant. The policy provides you with 5 unique portfolio strategies, out of which any one strategy can be chosen at the inception of your policy. Let us look one by one in detail. Investor selectable portfolio strategy. If you want to allocate your premiums based on your personal choice and decision, you can opt for this strategy and choose from among the 10 funds to suit your investment needs. You can refer the table here. Each fund has different risk profile. Choose a fund based on your risk profile. Next strategy, Wheel of Life portfolio strategy. In this portfolio strategy, premium would be allocated in 4 funds, namely Equity Growth Fund 2, Accelerator Mid Cap Fund 2, Bond Fund and Liquid Fund. In the proportion as mentioned in the table, depending on the outstanding years to maturity. The basic idea behind this is, as you are nearing the maturity period, funds will be shifted to debt. Next, trigger based portfolio strategy 2. Under this portfolio strategy, premium will be allocated between the 2 funds, Equity Growth Fund, which is an equity oriented fund, and a Bond Fund, which is a debt oriented fund, in the proportion of 75:25. Any appreciation in excess of 3 times the value of the units due to market movements is considered as gain and is switched to the liquid fund. Later, it will be switched to Equity Growth Fund 2 and Bond Fund such that to restore the same proportion of 75:25. Next, auto transfer portfolio strategy. This strategy helps you transferring your money every month from a low risk fund to the fund of your choice. First, your premium will be allocated to bond fund or liquid fund as specified by you. At the start of each month anniversary of the policy, a proportion of the fund value in the bond fund or liquid fund as on the date will be switched to the other fund available in the plan as specified by you. It could be 1 or 2 or a mix of funds. The proportion of fund value is equal to 1 by outstanding number of months till the next premium due date. The final strategy is capital preservation oriented strategy. The objective of the strategy is to optimize risk and return by investing across 5 predetermined funds, which are a mix of very high to low risk funds, in such a way that the monies invested over the years along with the accumulated returns are subject to lesser market volatility in the years closer to maturity. At the commencement of the policy, premium would be allocated to 5 funds, namely Equity Growth Fund 2, Accelerator Mid Cap Fund 2, Pure Stock Fund. Next, we shall look at the benefits of Bajaj Allianz Life Smart Wealth Goal Child Wealth Variant. Maturity benefit. The maturity benefit will be the fund value as of the date of maturity of your policy. Even in case of unfortunate death or accidental total permanent disability of the life assured during the policy term, the maturity benefit will be paid. Death or accidental total permanent disability benefit. If all due premiums are paid, then in the case of unfortunate death or accidental total permanent disability of the life assured, whichever is earlier during the policy term, the benefit payable will be prevailing sum assured plus prevailing top-up sum assured, if any, subject to a maximum of 105% of total premiums paid. Next, income benefit. On the occurrence of death or accidental total permanent disability of life assured, whichever is earlier, an additional benefit as income benefit will be payable. Each installment of income benefit is equal to one prevailing annual premium payable on the policy anniversary after the date of death or ATPD, whichever is earlier. Next, waiver of premium benefit. On the occurrence of ATPD or death of life assured, whichever is earlier during the premium paying term, all future prevailing premiums due under the policy will be paid by the company. The policy will continue with all other benefits till the date of maturity of your policy. Next, loyalty benefit. The company shall add loyalty benefit to the regular premium fund value provided all due regular premiums have been paid up to date. Even after the occurrence of death or ATPD of the life assured, loyalty benefits will be added to the regular premium fund value. Next, systematic partial withdrawals. Child milestone payouts. An annual systematic partial withdrawal for child's key milestones will be available in the last 4 policy anniversaries before the maturity date. You will also have the option to take the child milestone payout at monthly frequency. Next, we shall analyze the advantages and disadvantages of this policy. Advantages. At the end of the policy term, the company shall return you the following charges: mortality charge, income benefit charge, morbidity charge, and waiver of premium charge. There is an option to increase premium paying term. Except in the last 5 years, there is an option to pay top-up premiums or reduce your premium except in the initial 5 years. Option to receive maturity benefit in installments spread over a maximum period of 5 years. Disadvantages. Trigger-based portfolio strategy 2 and capital preservation orientation strategy can be opted for only at the inception. Once selected, these two strategies cannot be interchanged. The lock-in period is 5 years. The premium is invested after the deduction of charges. Even though they assure you to return these charges, the time value of money is not considered. There is a chance of mismatch in the milestone payout and your child's educational requirement. As an investor, you would be convinced to buy an investment product if you know the return on investment. So let us take a closer look at the benefit illustration taken from Bajaj Allianz official website to understand whether it could potentially provide a better return in the long run. If a 35-year-old male buy this plan for a sum assured of rupees 10 lakh, then his annual premium would be rupees 1 lakh. The policy term is 20 years, the premium paying term is 15 years. The assumed rate of future investment is at 4% and 8% at worst and best case scenarios respectively. These assumed rates of return are not guaranteed and they are not upper or lower limits of what you might get back. You can observe the cash flow in the table. The allocation charge is returned in the 10th policy year, fund booster in the 15th policy year, payout in the last 4 years before maturity. Also, at the end of the term period, all charges are returned along with the fund value. The IRR at 4% return is 2.46% and 8% return is 5.46. Though the plan invests the premium in the market, the returns we get are less than a debt instrument return. As an investor, this return on investment is not beneficial in the long run as it will not be sufficient to beat inflation in the long term. Now let us compare Bajaj Allianz Life Smart Wealth Goal Child Wealth variant with other investment vehicles to see if they can produce a better return. To provide us with life cover, let us take a pure term policy, and for investment, let us consider PPF or ELSS. For comparison purposes, let us assume a similar cash flow as in Bajaj Allianz Life Smart Wealth Goal Child Wealth variant. There are cash payouts towards the end of the policy term. We can assume the same here. After paying the premium of rupees 8,700 for pure term insurance policy, the balance amount of rupees 91,300 could be invested either in PPF or in ELSS. The IRR post-tax return for pure term insurance plus PPF is 6.48% and pure term insurance plus ELSS is 9.51%. Although Bajaj Allianz Life Smart Wealth Gold Child Wealth Variant Plan invest in the market, the returns are substantially low. Here in PPF, which is a debt instrument, we get a better return compared to Bajaj Allianz Life Smart Wealth Gold Plan. The ELSS option provides you with inflation beating returns which are required for your child's future educational goals. This shows that from investment return perspective, Bajaj Allianz Life Smart Wealth Gold Child Wealth Variant Plan will not be suitable for your child's future educational goals, as it is difficult to meet the inflated educational cost in the future. Here is our final verdict on Bajaj Allianz Life Smart Wealth Gold Child Wealth Variant. This plan offers you various investment strategies and return all the charges at the end of your policy term. This is nothing but returning your own premium amount which was deducted earlier. They just sum it up and return them to you without considering the time value of money. The education inflation has been around 10 to 12% these years, which is double that of your household inflation. To meet the skyrocketing educational expenses, this Bajaj Allianz Life Smart Wealth Gold Plan is not suitable. The analysis proves that separate investment for your goals help you to achieve your goal. Any ready-made child wealth plan may leave in deficit when the financial goal is near. You can read about the policy in detail and also some practical way in which you can plan for your children's education in our website. The link for these articles is given in the description. Hope you like this video. If you have any questions related to this or any other investment option or related to your financial goal, don't hesitate to book a free appointment with our financial planners. The link to the free booking is given in the description box below. Also, will you be interested to attend any insightful investment webinar? Then feel free to register for the upcoming enlightening investment webinar. It is completely free. The registration link for the upcoming webinar is also given in the description box. If you like this video, please give us thumbs up. Also, share it with your social circle. If you haven't subscribed our YouTube channel so far, please subscribe now.